Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm Santosh Nair. Well, let's take a quick look at how the markets are set up this morning. Overall, the SGX Nifty futures indicate a strong opening for the Indian markets. SGX Nifty is up by close to about 61 points as we speak. Yesterday, the Nifty made a good comeback after a bearish start, although it's still a little short of its 50-day moving average, but sentiment definitely has changed for the better now that we are seeing a positive trend in global markets as well. Overnight, US equities ended on a firm note, and this morning Asian markets are also pretty firm. At this point in time, the slight cause of worry is the erratic foreign institutional investor inflows. Yesterday, FIIs were net sellers to the tune of a little over 500 crores, although domestic institutions more than made up for it. They were net buyers to close to about 550 odd crores. And joining us in today's opening bell is Digant Haria, co-founder of GreenEdge Wealth Services. Now, Digant has been tracking the banking and financial services space for over a decade now. Formerly, he was a credit analyst at banks like Axis Bank and JP Morgan. He's also been a stock analyst tracking the banking and NBFC space at ICICI Securities and Antique Stock Broking. Well, Digant, pleasure to have you with us here this morning.
Thanks. Good morning. Pleasure is all mine.
Well, we'll be talking about Bajaj Finance. That's the stock in focus this morning, and I'll be quizzing Digant on his thoughts about the stock, something he's been tracking for quite some time now. So, Digant, let me begin by asking you, what exactly is the business model of Bajaj Finance, and how has this company been able to deliver such superior returns over many years compared to other NBFCs?
The last 10-12 years, Bajaj Finance has been probably the best success story in the financial sector. Every big success, there is a certain strategy and a certain niche that the company has been able to find. So for Bajaj Finance, that the niche was something which the large banks were not focusing on. So if you go back to 2010, see, most of the large banks were focused on the top 1 crore families. Okay, typically people who had government jobs, who were employed with category A companies like a TCS or an Infosys or, all these prime companies. These were the customers who would get all kinds of loans from the top banks, the banks like ICICI, Axis, HDFC, and so on. But then, there was, if you look beyond the top 1 crore families, there were 4 or 5 crore middle class families, or, which we typically call as the aspirers, the ones who, are moving up the value chain. So they start their life with a 20,000 salary and slowly and steadily they move up the value chain. So Bajaj Finance took a very big call in 2010-11 that this is a segment where if I take certain risks and if I lend to this segment, this is a segment which is going to do very, very well. So they did take that risk by identifying what is this kind of consumer going to buy. So their survey revealed that this kind of consumer is going to buy a good smartphone, a very good looking TV, a very, very, advanced refrigerators. So this is how they began their journey. And remember, Santosh, that in 2010, the data on all these guys was not easily available. CIBIL was the only database that we ever had. So Bajaj Finance said, I will lend to these guys. I will take a risk of 30,000-40,000 rupees and I will build my own database. So they went to, thousands of electronic stores in India where these things were sold. And then they started offering these 25,000, 40,000 loans. And over the next 3-4 years, they built a really good database. They worked on refining that database and understanding which of these customers are really moving up the ladder in their own financial journey. And then they started offering them personal loans, business loans. So they gradually diversified from, just giving that 30,000-40,000 rupee loan to, a 2 lakh loan or a 5 lakh loan, and eventually even a home loan. So this is how, Bajaj Finance created their niche, which I would say, their niche is the next 5 crore families, not the top 1 crore families of India. And, they were very good at, taking risk, getting the data and reducing and controlling that risk later on. So that is what we see Bajaj Finance today, that today Bajaj Finance has more than 79 products They are catering to all kinds of products, all kinds of consumer categories, all kinds of channels. Like Bajaj Finance is a typical, buy now, pay later of the physical world. Today buy now, pay later is a good buzzword today, but Bajaj Finance was the BNPL 10 years back. They would be present in every electronic store you can think of. So that was their secret sauce, and that is what is helping them today. That even with a 2 lakh crore plus kind of a loan book, they are making 4.5% kind of ROAs. That's completely, on India, nobody has done this at this scale. So I would attribute that success to taking certain risks on the middle class and managing those risks really well.
So, Digant, now if you look at the second quarter numbers of Bajaj Finance, they've been pretty robust across all parameters. Asset quality has been improving. Assets under management has gone up. They have added about 2.6 million customers, and they are targeting about adding about 11 million customers for the whole year, which they said that they are pretty much on track to achieve that. Yet, if you see, the stock has been struggling through the year. It's been slightly down compared to a 3% rise in the Nifty. So, what's not working for Bajaj Finance at this point in time? What are investors worried about?
See, Santosh, I think I wouldn't say people are really worried about Bajaj Finance's ability to deliver growth and profits. I think the reasons are slightly more indirect. Let me break it down into two parts. Okay, one is what's probably happening to the whole financial sector. Because see, if you look at the last 10, 12 years, Bajaj Finance loan book was growing at 37%. Their profits grew at 40% CAGR. And in those last 10 years, the best of the private banks like HDFC were growing at 20%. And, the rest of the private banks were growing at, say, 14, 15%. The guys like Axis or a Federal or an ICICI. So that growth differential between Bajaj Finance and rest of the financial pack was so large that investors re-rated the stock of Bajaj Finance from, say, 1.5 times price to book to something like 8 times price to book. Now, that valuation expansion was so large, and it was probably justified in the last decade because it was not easy to get a franchise growing at 40%. But now you look at what has happened after COVID. We have seen that NPAs across banks have been cleaned up. Balance sheets are very clean. Even Axis Bank, ICICI Bank are on their way to deliver 20% kind of CAGR. And on the other hand, Bajaj Finance, because it has now become so large, they are talking of a 25% kind of a loan CAGR. So this differential between the growth that Bajaj Finance can deliver and the growth which an Axis or an ICICI or an HDFC can deliver, the differential has really come down. So now, as an investor, I would think, does it make sense to pay so much of premium for Bajaj Finance? Maybe not, because that growth differential has come down. So this is one indirect reason. It's got nothing to do with Bajaj Finance per se, but it's got everything to do with what's happening to the other part of the financial sector. The second part which I want to highlight is what is happening to Bajaj Finance. I think, see, their size has really gone big now. 2.3 lakh crores is a big AUM. Growing at 25% on this base, I would say it will not be a very straightforward journey because of three reasons. One is, at some point in time, RBI is going to tell them that you are so large that you need to become a bank. And once they move to a banking kind of a structure, the profitability, which is 4.5% ROA, will move to something like 3.5% ROAs. And we've always seen that banking is a painful journey. So somewhere in the next 5, 7 years, Bajaj Finance will have to bite that poison pill of a banking license. Second is that in this whole BNPL format, we see a lot of these platforms coming in. Someone like a Paytm or a lending card, or there are hundreds of them who are fighting for that pool online. Maybe they'll not make money, but they'll take away some of the growth and the profits which otherwise Bajaj Finance would have made. And see, if you look at the whole digital stack and the digital acquisition, Bajaj Finance is probably not the leader. There are a lot of others who are probably as good as Bajaj Finance in the app or the online space. Offline, obviously, Bajaj is the leader. So I just think that a confluence of these two factors. One is that Bajaj has reached a size. Second is there could be a banking license overhang in the next 3, 4, 5 years. And third is, obviously, there's a lot of competition heating up in the BNPL space. So that is why I think because of all these three reasons, the stock has derated. Last 1 year it's gone nowhere. See, and Bajaj Finance may still do well for the next 2 years in terms of numbers, but who's to say stocks may still correct. And it's not Bajaj Finance alone. You look at Chola Finance, you look at Aptus, you look at AU, Avas, all these high P stocks, they are, you know, they're probably moving together in terms of underperformance.
So now, Digant, interest rates have been rising and they look set to rise for some more time. Now, what does this mean for Bajaj Finance in particular and overall the NBFC space in general? Sorry, Digant, could you hear my question? Now, we are having some difficulty in connecting Digant, but we'll be back with you shortly. We're just about a minute away from market close, market opening at this point in time, and today is also the last trading day of 2022. Benchmark indices have had a very volatile run this year. The Nifty is just about 3% up for the year, but on the whole, it's not been a very comfortable year for most investors in terms of returns, unless you were in the right set of stocks. Quite a stark contrast from 2021, where you could have, for at least for the first 9 months, you could have picked any stock at random and made hefty returns on those stocks. But 2022 has been fairly tough, and going ahead also, it looks like this volatility would continue, given that we are grappling with rising interest rates and also a possible recession in the US. Well, and with that, the market has opened. It's a firm start for the Nifty as indicated by the SGX futures. Nifty is up by about 65 points. Overall market breadth is very positive, close to about 1700 stocks up in early trade against less than 200 stocks that are down at this point in time. Nifty mid cap has also opened on a firm note. Nifty mid cap 100 up by close to about a percent. The Sensex is up by close to about 252 points. So overall, a very strong open for the market on the last trading session of 2022. Yes, Digant, sorry we lost you. Can you hear me now?
Yes, I can hear you. Sorry, I think the connection.
Yeah. So Digant, I was asking you, now interest rates have been rising. Now what does this mean for an NBFC like Bajaj Finance and also the industry in general?
See, I think the because when the interest rates rise, the companies which don't have pricing power, they are the ones who tend to lose out. I think Bajaj Finance, except for their housing business, I don't think anywhere else they have a very big problem to worry about, because in the consumer space they lend at very high interest rates, and they can really pass it on to their customers, because it's not that an ICICI or an SBI is sitting very ready to give loans to people whom Bajaj would be giving. So in a way, I don't think interest rate rising is a big problem for Bajaj Finance. In fact, they could actually see some bit of margin expansion. In the last cycle, rising interest rates have always helped a strong company like Bajaj Finance, which has very good capital franchise, a very good liability franchise.
Well, I think we are having some connectivity issues there, and let's take a quick check on the markets and then wrap up this show. Well, Go Fashion is among the big gainers in early trade. The stock is up by close to about 2%. Bikaji Foods is up by close to 5% in early trades. And overall on the NSE, at this point in time, over 2,000 stocks are trading higher and about 234 stocks are down at this point. And well, with that, it's a wrap on this edition of Opening Bell. Thank you for watching, and we'll be back with you at 3 p.m. today.